Hello gang, Mandla here at FX Link. Thank you for joining us on this week's Sunday's market preparation video. In this week's video, I'm going to show you how to build a case for entry only using Fibonacci analysis, wave analysis, and structure analysis, and the principles of higher highs, higher closes, how to take advantage of the slowdown of the market and catch the next relief in the market. So without further ado, let's just jump right into the charts and I'll see you right there. Hey gang, thank you for joining me on the charts. As you see right now, I'm looking at the Aussie dollar pair and the market seems to be going sideways, right? Now when I get to the daily time frame, I want to look at significant support and resistance levels so I can take advantage of those particular moves, right? First of all, we'll take a look at this low right here. Let me change the color quickly. All right. Now, another level we will take a look at is this current level where the market has made a support level right here. So let me put a line so it could be clear for you guys. Okay, thicken it up some. Let me thicken it up some. Yeah, it's quite visible right now. Okay, and while doing my analysis, I will usually take my tools, which is Fibonacci levels and ABCD patterns, in order for me to find confluence at a level where I'm looking to buy at right here, which is the level that we are analyzing right now. Okay, first thing that I found is that I have an ABCD pattern from this swing high, okay, back to this swing low. And if I copy and paste that, take this leg to that retracement level, you would see this ABCD pattern is terminating somewhere right here. Okay, if I take my Fibonacci extension tool from this swing high to this swing low, back to the swing high, you'd see I have a 127 extension right at 76.50s, which is a zone, which is where we marked out a zone right here. Again, if I take my Fibonacci retracement from this swing low right here back to the swing high, okay, you would notice I have a confluence of a 127 extension and a 786 retracement with an ABCD move lining up exactly where the market is sitting at right now. Okay, and if we could analyze price action, if I could delete, let me take this one off. If you could analyze price action, you would see as price action came down, okay, it came down smoothly, retraced, okay, sellers struggled a little bit to make a lower low, then we had a retracement, but now as we came down here, we're beginning to have a consolidation, and consolidations gives us a clear sign that the market is slowing down and we are having a halt. Now since we are having a halt, I'm looking for a counter trend trading opportunity of going long, so I'll be looking to go long in this case. Okay, as I go down to my lower time frame, which is my 4-hour time frame, I'll be analyzing where the market is going. How will the market go to my potential take profit levels, and how will I take advantage of that move in order for me to be engaged in the market. Okay, as you see, it's quite clear. As soon as the market came down, okay, we had a retracement. Now we are consolidating. Okay, now as we are consolidating right here, let me delete these. I like a clean chart, guys. Excuse me. I like a clean chart. Hey, yeah, yeah, yeah. Do you know the song? I just made it up. Stop it. Stop it. You get it, don't you? You get it. Okay. Now, as the market has been consolidating, how will the market go? Where? Go. How will the market go to our anticipated take profit levels? There are only two ways. Either price could hit these levels exactly as soon as the market opens, or in this case, since we are having a counter trend opportunity, price could go down a little bit, then go up and hit these take profit levels. Okay, so how are we willing to take advantage of this opportunity of going long? I will wait for price to go down, hit these support levels, then continue up and hit our first take profit in this case. Okay, from this swing high, okay, back to this swing low, I have a 382 retracement and a 618 retracement lining up between these two levels. Okay, so if you want to break down your take profit levels, you do this. Let me 618 and our 382 retracement. So we have our 382 right in here. Your first take profit could come right here at a 382 retracement level. Then your second take profit are a little bit higher than this resistance right here. If I have this certain type of scenario, I usually default my take profits to where the market is giving us a resistance. So you could take your second take profits either right here to here. Okay, so let me take these off. All right, now we have two levels that we have potential profits at. How can we minimize our risk and maximize our reward? That's when we go to the lower time frame, which is the 1 hour time frame. And on the 1 hour time frame, I like to recognize patterns with my Fibonacci retracement tool, Fibonacci extension, ABCD patterns, and all that good stuff, support and resistance. Okay, in this case, you would see yet again we have our low right here. Okay, we have our high, which is right here. I will have an ABCD pattern from this swing high. Okay, swing high back to this swing low right here. Okay, then as I take it, you would notice I have a ABCD pattern terminating at these levels of support right here. Okay, and if I take my Fibonacci extension from that swing high back to this swing low and take it back, what do you notice? We have a 1414 with a 1618 aligning exactly on that zone. Okay, now we have a pretty significant zone, and we have a line that we have drawn out on the daily time frame, which proves that we have a pretty significant support level right here. So I would give it a 2 points for that support level. Okay, then I would need to have another thing left, which is price to come in my zone right here. Let's say price does come to our 1414 extension. Okay, what do you notice on that 1414 extension? As I take my line exactly, as I take my line there, we have a support and we have another psychological level, which is 76.50s. Psychological levels are levels that usually price action would usually react to, and those levels are easy to recall, like 50s, hundreds, even numbers, whole numbers, that many people usually like to revert to in their minds. I'll be looking to go long with this position size. Let's say, hypothetically speaking, price does come to our support level, give us a double bottom with a bullish divergence and a higher close. I'll be taking my first targets right here for a 45 pip reward, and then for stop loss, I'll be going 10 to 12 pips lower than this low, which would mean I'll be going for 22 pip risk on this particular trade. Okay, then for second take profits, I'll be shooting for 72 to 73 pips worth of reward on this one, which would give you a risk to reward of 1:3.35 risk to reward for a risk of 22 pips and a reward of 73 pips.